Real estate is a class of real property that includes land and anything permanently attached to it, whether natural or man made. So, from this definition, we can say that real estate property are real properties which are immovable also, such as buildings, lands, bridges, etc. There are mainly two types of real property: residential and commercial. Under residential, there are single family homes, multi-family homes, low-rise, mid-rise, and high-rise buildings. And under commercial, there are office, retail buildings, industrial buildings, hotels, etc. So we can say that the purpose of residential and commercial building are totally different. Residential buildings are made for the living of family, and on the other hand, the commercial buildings are made for to run a business. Let's see the rationale of real estate property. First one, income plus appreciation. Rents are generally sufficient to cover the expenses associated with owning the property and to provide the owner with a return on the capital invested in the property. So actually it means that if you want to build a real estate property, you have taken loan from a bank or financial institutions. So you have to pay back the dues with interest, right? Now, when you have built a real estate property, you have invested on it, so you're generating return, and that return will be enough that you are paying back all the dues, and after paying all the dues, you have extra amount of money in your hand, and that is called income plus appreciation. So suppose you have built a building taking a loan. After taking a loan, you have built a building, so now you have renters in your building. Every floor you have 3 units of flats, and then you have given them those flats as rent. Now you are generating income every month, rental income. So that income is well enough to cover up all the dues. Then after paying the dues, you have left over with the cash that you can spend for your daily expenditure. That is called income plus appreciation. Now the second one is inflation protection. Now at first let's know what is inflation. So inflation, when a country's inflation rate increases, that means that the price of the commodity of that country also increases, and that also means that the purchasing power of the people of that country decreases. We can also say that the currency of that country depreciates. Now let's know inflation protection, how real estate property protect you from inflation. If prices of goods and services are increasing, rents will likely rise as well, and even after paying inflated property operating cost, owners will be left with a rising residual. So this means that if you have own a real property, that means a building, you have a building, now you are the owner of that real estate property. Now inflation rate goes up in your country. That means that your daily expenses also increase. So to cover up that, what you can do, you can increase the rent of your house. So the renters this time will have to pay extra amount of money to stay in your house. So your income also increases because inflation rate increases, so your daily expenditure also increases, and after that you have to pay the dues that you have taken loan from the bank. So to cover up all those things, you have to increase your rent of your house. That is called inflation protection. This is how you can increase your the rent of your house, and you can get a cover up from inflation. The last thing, the last one is counter cyclical with securities market. What is that? The landlord has the ability to adjust rents upwards and increase cash flow. The ability to increase rent levels in response to inflation is a unique attribute of real estate investments and can preserve the value of property in the face of inflation. So this is a very unique benefit of owning a real estate property, because if you have a real estate property, and inflation rate increases, you can increase the house rent. So it is in your hand, you're the landlord, you're the owner of the house, so you can increase the price of your house. Okay, so the renters will have to pay more to stay in your house. Now you cannot get that opportunity, that benefits, if you're holding a bond or stock or any other unreal properties or intangible properties. If you hold that, like inflation rate goes up and you're holding a bond in a and holding stock or share in a company, you can't increase the price of that bond or stock or any intangible assets. But this is a very unique opportunity that you can gain by owning a real estate property. So if the inflation rate goes up, or any other factors that is pushing your daily expenditure to go up, you can adjust that by increasing the house rent, which opportunity you cannot get from any other intangible assets or unreal assets like stocks, bonds, right?